Thank you very much for joining us today at this interesting White and Case session where we're talking about the opportunity for Islamic finance to assist with the transition to clean energy in the continent of Africa. The backdrop, of course, is COP27, and all of you will know that's going on. There are world leaders on the stage speaking about opportunities to deal with climate change, opportunities to deal with energy transition, and also opportunities to help many countries across Africa make that transition or protect themselves from the effects of climate change. I'm joined by my partner, Sherief Rashed, who's based in Cairo and is in the heart of where COP is taking place. I'm Debashis Dey. I'm one of the partners at White and Case. I do a lot of Islamic finance, and together with Sherief, we've done a lot of the cutting edge Islamic finance across bank, capital markets, and project finance. Let me turn the mic to Sherief for a minute, just so he can introduce himself, and then he will come back to me. But before I do that, for those of you in the audience who are listening, if you have questions today, please feel free to enter them into the chat function that you have on the web portal. And if you do so, those questions will be filtered through to me and I can ask them on your behalf. So thank you very much. Sherief, can you just say hello?
Hi, thank you, Debashis. My name is Sherief Rashed. I'm a partner with White and Case. I've been with White and Case for the last 14 years. I'm a part of the energy infrastructure and project finance group of White and Case, where I focus a lot on doing Islamic financing transactions or hybrid Islamic financing and conventional transactions. I have been around the Middle East, so I was in the UAE for 8-9 years, and I was part of the team that launched the Cairo office of White and Case back in 2017. Back to you, Debashis.
Thank you, Sherief. So I think to set the scene a little bit, obviously we know the backdrop and the trends for Islamic finance generally. It is a product that is really driven by investor demand and sometimes by the requirements of a particular sponsor of a transaction or issuer. But a lot of it is investor demand for Islamic finance, which often sits side by side conventional. Now, in the Middle East, there's obviously a huge amount of this, and that's the area where you and I, Sherief, have done a lot of our Islamic finance work. And of course, we see some in Asia. But maybe, given where we are, particularly with COP and you sitting in Cairo, I can start with an opening question and say, look, what is the current market size or demand for Islamic finance in the continent of Africa? Because that's an area where I'm unfamiliar on how much Islamic finance actually takes place there.
Yeah, thank you, Debashis. I think on the back of COP happening, COP27 happening in Africa, particularly in Sharm el-Sheikh in Egypt, I think it was important to get a better understanding of how all those green projects and energy transition projects could be financed. And in the context of financing such projects, I think African countries would have to look at tapping all sorts of financing tools or financing structures that are available. And as such, Islamic finance is obviously a form of liquidity that is available. And particularly in the Middle East at the moment, with high oil prices, investors would be looking at investing or available liquidity to invest in energy transition projects. So looking at Africa, we thought, okay, so what is the current Islamic finance market? Of course, it exists. There are some Islamic banks in different African countries here and there, but actually, what is the size of the market? And the answer was slightly astonishing, because you're looking at a continent that is the size of Africa, with basically 0.5% of the global sukuk issuances market. 0.5% is a negligible percentage for a continent like Africa that actually needs financing, right? You're looking at the size of the Islamic banking assets versus the entire banking assets that are available in the continent of Africa. You're looking at below 5%. And that is why we're thinking that this is an incredibly important topic to discuss, because on the contrast, you look at GCC countries, for example, and you're looking at 44% of the banking assets in the GCC are Islamic finance or Islamic financing assets. Obviously, it varies between countries. You've got Saudi Arabia taking the highest percentage in its own market, like more than 50%, and then different percentages based on different countries. So obviously, it is a topic worth having a discussion to understand the reasons for it and what could be the potential solutions for it, and open the conversation.
Thank you, Sherief.
Thank you.
I mean, it's interesting. So you're essentially saying 0.5, so essentially less than 1% of global Islamic finance demand. But I guess the cynic in me might say two things in response before I open the floor to ask you the question of why. If I think about the Gulf and our experience in the Gulf, we have two really, I think, important factors in my mind why Islamic finance is successful there. The first is that you have a core constituency, an ecosystem of Islamic banks that offer deposit, or they are deposit-taking institutions for retail and commercial customers. So they are bringing in flows that require them to be Islamic. And then they must give a return or a profit on those. And so they must then seek out investments themselves to be able to give their shareholders and their customers a return on these Islamic deposits. So that's a sort of win-win circle of, well, I have this customer base, I need to be able to return a profit to them, and therefore I must go find investments which are Sharia compliant that yield a profit. That's item one. Number two, I would think that, look, if the core constituency of these investors in the Middle East are banks, they're always going to be very sensitive about credit worthiness of any investment opportunity, because they're really using depositors' money to make these investments. So they want that money back at some point. While I understand Sharia's point about risk and reward, the reality is that those bank investors don't really want to take the risk because they're using someone else's money to do so. So in the continent of Africa, do we have this ecosystem? I mean, should we start with Egypt first, and then you can talk about your experience in some of the other countries? Is that what we're missing, or is it the credit quality? What are the factors that you believe, Sherief, are holding us back?
Thank you, Debashis. So I think there are multiple factors, right? In terms of the existence of the market, you have 638 million Muslims living in Africa, right? That is not by any feat a small market that will be interested in at least doing the deposits in a Sharia compliant banking system or Sharia compliant products, or so the demand, at least in theory, is there, right? Because there is that Muslim population. Now, one of the issues that usually people think about is that Islamic finance is only available for Muslims, or only financing or only financing Muslims, but that's not really the case, right? While Islamic finance would look at Sharia compliant products and financing Sharia compliant projects, it is not just available based on religion. So while that answers your question in terms on the retail level, in terms of whether people would be interested in doing it or not, I don't think it's a matter of availability of the market, right? But a multitude of other factors. I think before I speak on the environment, you have to take a step back and look even at the banking system generally in Africa, right? And it's difficult to generalize in a continent that large, but roughly speaking, you're talking about a problem about actually even access to a formal banking system as general in Africa, right? That is a problem. You see that in Egypt, the formal economy versus the non-formal economy, i.e. money being transferred through a banking system versus friends and family, for example, situation is almost 50-50, right? So a lot of the data that are available in Africa about financing is not necessarily up to speed, because unfortunately there is a lot of informal economy going on, and over the last decade or so, or even more, governments have been working hard to try to get over that and introduce certain regulations to encourage people to start using the formal banking system. For example, a couple of years ago, Egypt introduced a requirement that if you're paying for any fees or any transactions with the government, for example, you're applying for your driving license or renewing your ID or whatever, you have to do it using a credit card or a bank card or a bank issued card, just to encourage people. And the same applies to government salaries that are now hitting bank accounts as opposed to just being handed in cash through the teller within the relevant authority. Now, that is, while that sounds very small, it's actually massive, because it provides a certain environment to educate people to use the banking system. The banking system is safe. Using a card is safe. You are protected, and so on and so forth, because there is a lot of that going on in minds of people about putting their money on the banks and whether they risk losing it or not, right? So that is obviously one aspect. But if we dig deeper and talk about Islamic finance in general, I think it's, Islamic finance specifically, I think it's really the lack of a proper regulatory framework that addresses all the issues, right? Like, you look at the Gulf and you wouldn't have any doubt about the tax treatment of a sale and leaseback arrangement, right? You wouldn't think that if I sell the assets, if I'm doing an ijara structure, and I'm selling the assets and leasing them back, you wouldn't have doubts about whether that is actually a taxable transaction in terms of transfer of an asset, right? But you look on addressing that in Africa, while you could pass, while banks would have a license to do Islamic financing, you might find the tax code, for example, falling short in addressing this particular issue, leaving a gray area in the opinions we issue on transactions, saying, by the way, we're not really sure how the courts are going to treat that. Maybe they treat it as a normal financing, but maybe they actually treat it as an actual sale of an asset, and as such, it requires the payment of tax. Now, that's a massive problem, particularly because Islamic finance is an asset-based financing. You have to have some sort of asset in order to create or financing a certain asset in order to create a financing structure. So I would say on top of my list would be the legal and regulatory framework that is available, that addresses every issue, and not just a law that gets passed to address a particular, like a license for banking services. Fine, that's great. And
can I get you to pause there, Sherief? Just so to unpack a little bit of the detail. So it sounds like what you're saying is, look, there are sort of 2 points that immediate observations. The first is just the ecosystem of banks generally in Africa, and then you use the example of Egypt, which is, 50% of the cash flow is sitting outside the banking system. So even if you are an Islamic bank, the need or the deposit levels that you have may not be as high as you have, say, in the Gulf, where a lot of the money goes into the banking system. I actually, maybe not disagreeing with your point, but then leaving aside a developed economy or a deeper economy like you have in Egypt, as you move out of that country into some other countries in the continent, I would argue that notwithstanding your 600 plus million Muslims, I don't know what percentage of them actually have bank accounts. I've been to countries like Nigeria where we've talked about the banking system, with the parties who are regulating and setting up banks. And the reality is that their qualifications for including, customers the thresholds are so high that a significant portion of the population can't get bank accounts, which means they're not even in the banking system. So that leads me to the point that maybe we're looking in the wrong way in Africa. Maybe we shouldn't be thinking, let's not make this investor-led. Let's think about it at the sovereign level. And that leads me to the next point about your legislation. So I've worked on projects where we've done modification to legislation in Turkey. Most recently, I've done it in Uzbekistan. I've done it in Kazakhstan. And in the same case, each time we had to go through dozens of pieces of legislation from, as you say, we have to look at corporate tax, we have to look at capital gains, we have to look at things like commodity trading. We have to look at whether the tax code understands that profit under Islamic finance should be allowed to be deducted in the same manner as somebody who in conventional finance has interest. Those are points that actually take a lot of time, and you have to have government buy-in to agree to the modification of legislation. But I've also done sukuk in countries like South Africa, where the sovereign wanted to do a sukuk, and actually they were able to drive through legislation very quickly for the purposes of the sovereign level. And I know the same thing has happened, I think, in Egypt, where effectively you focus at the sovereign level, and hopefully that allows others to catch up. In Kazakhstan, in particular, our approach working with the UNDP was to basically focus on the sovereign. And isn't it the case that while we're pessimistic about, the banking system, if we look at climate change and what COP is saying and what the countries are saying at COP, which is help us deal with climate change by helping us build infrastructure to deal with the effects of climate change, couldn't that be done at the sovereign level? And couldn't we basically use Islamic finance there? That's, I guess, my more optimistic question for you, Sherief.
No, I think I completely agree. And I think, again, just giving an example of Egypt, as you just mentioned, I think in 2021, we did pass the sovereign sukuk law, which actually addressed almost all of those issues in one law, which is fantastic. In 2022, I think we passed as well the executive regulations for that law. Now, unfortunately, Egypt has been very keen about issuing sovereign bonds for quite some time now, right? And real energy, or it got picked up. It picked up real steam in 2017, 2018. Now, unfortunately, we weren't helped in the last few years with multiple global events that had an impact on the global capital markets and on the global capital markets, like, for example, the pandemic, right? We had a couple of years or 2.5 years of uncertainty, right? When that was done, okay, let's pick up some steam, let's pass the law, we're getting there, let's issue the bonds. Then comes 2022 with all the issues, again, the global capital markets or the global debt markets as well are facing in terms of uncertainty. But I have no doubt, right, that this is happening. And you're absolutely correct that should really be the driver. And the reason why it should be the driver is because Islamic finance in a lot of countries in Africa, Egypt, one of them, of course, requires a little bit of awareness, right? We had our chapters in the past with maybe informal Islamic finance, and there was a lot of misconceptions. For example, what are we doing? Because as I mentioned earlier, Islamic finance relates to financing assets, right? So there has to be an underlying assets that are related to the structure. So because of the lack of awareness, that could be translated politically and socially, like, is the country selling its assets? Are we selling X, Y, and Z of our assets to investors from outside of Egypt, right? And that gets people worried, right? And that is lack of awareness. So I think it is, while the legislative framework to some degree exists in a country like Egypt, I think it's also hand in hand important to ensure that awareness as well and education on a social and political level is there, so that the next step becomes using as well retail or regular Islamic finance banking on a population level and not just on a sovereign level. But agreed, for the infrastructure projects we're doing with Egypt, for example, pushing for multitude of hydrogen projects and renewable projects that are happening, absolutely, right? It has to be really driven by the sovereign if they're willing to push that through and if the market conditions are right.
Thanks, Sherief. I have a question that I've received from the audience, and I think I'll tackle it first with an answer and then ask you what your thoughts are. So the question that's come through is, what is the return on investment of energy transition sector with respect to other sectors in Islamic financings, which is like a compare and contrast in what's the return on investment in, say, Islamic finance and energy transition versus, say, other types of Islamic finance? And I think it's a bit of a complex question. One, because lawyers don't always get to see the economics, but I will frame the answer in the following way, which is Islamic finance is finance. So in order to know what your return on investment is, you have to think about the equity contribution of the sponsor and then the amount of leverage or finance that's being brought in, which will change the economics of the return on equity. Less equity, greater financing, better return on equity or return on investment. So there are really two assessments in my mind when you're looking at Islamic finance, which is what is the return on equity? And then also what is the cost of the financing, which has an impact on the profitability of the project for the sponsor. Because if there's a tariff regime around, say, solar power or wind power, the sponsor can only charge so much. They have to bring in leverage, put in their equity, and then they can only charge so much. So the question will be, in my mind, the following, which is the cost of Islamic finance generally more expensive than conventional? Question one. Number two, is the cost of Islamic finance in energy transition projects more expensive than other types of Islamic finance in the project finance sector? So question one, Sherief, in my space, I generally find that they're comparable. And also in my space, in question two, I find they're comparable. But what is your experience thinking about those two questions?
I think I think in your space, I think Sukuk issuances have, although I cannot say that they are now standardized, but has reached a certain point of standardization where everybody knows I'm doing this structure. This is usually the documents you do it for. This is what you need. This is usually the timeline. I don't want to use the word standardization because definitely I think you will agree we're not there yet, but there is a certain level of market practice agreement about what we're doing, right? But in my space, that is not the case. I'm assuming here we're not just talking about the cost of funding, because cost of funding really depends on who's financing it and what the cost of funding is, right? But even the cost of doing the transaction itself is slightly different, right? Because it takes more time. Let's say from a lawyer's perspective, there are probably more documents than when you're doing a conventional financing. There's a little bit of education as well for people with every transaction we do about what the structure is and what the risks are and how those risks are addressed and so on and so forth. While in your market, everybody knows what the risks are and it's clear and they've been doing it for a while. And of course, you face your own.
But I'm going to interrupt. Let me interrupt. I think it is about the cost of funding. I think that's where the question's coming from. So let me dig a little bit deeper. In my Sukuk market, which isn't really often used in the project finance market, so we don't see Sukuk, which are capital markets instruments, really used in energy transition. I'd like them to be, but they're not. I would say that the bulk of our issuers may be government linked, but they're kind of corporate focused. And therefore the investors are a wide array of investors who would invest in corporate debt. Now in your space, so that means the cost of funding is really tied to the global capital markets. In your space, certainly in the Sukuk, in the Islamic bank finance and project finance market and in energy transition, I see a lot of multilateral and ECA and other types of involvement, which can change the cost of funding entirely into a bank-led type of cost of funding and sometimes drive that funding down to a lower cost of funding than compared to capital markets because of the involvement of ECAs and multilaterals. Now, I don't know, is that the case? Are you seeing that in energy transition projects in Islamic finance as well as the other types of Islamic finance, or you're not yet seeing that? Because I think cost of funding is what people are thinking about.
Yeah, no, I think I don't see that much, to be honest, in terms of using Islamic finance structure for energy transition, right? Because as you just mentioned, there's a lot of ECA-led, multilateral agencies-led financing that are going there that it becomes impossible for regular banks to compete with. And while we do have multilateral Islamic institutions, it's not as active or have access to similar amounts of liquidity to be able to compete with ECAs and DFIs, for example, IFC, EBRD, and so on. However, we are seeing indeed interest from those organizations to try to understand more and do more of Islamic finance. And again, it's a shy attempt. It's not absolutely even close to being comparable or even in competition. And that's why I was maybe a little bit discussing complexity a little bit, because what usually throws these agencies off from doing it in an Islamic finance structure is the complexity to understand it when there is a pressure to close a transaction. And when it comes to a bank tranche of project finance, which is non-ECA, it's just simply business for the borrower, right? The borrower just looks at it, looks at the pricing, and if the pricing is higher on the Islamic, it wouldn't be taken, right? But if it's comparable, equal, or lower, definitely they would take the tranche up and ignore the complexity a bit, because usually project financing takes a little bit longer than regular corporate lending. So it allows the time for the documents to evolve, so they wouldn't mind the timing aspect of things.
Thanks, Sherief. Can you just have a quick look at your camera? For some reason, it's come back into focus. Anyway, it's okay. Thank you. So I was just thinking about that. You know, it sounds like one of the thematic issues, there are sort of two or three. There's a lack of regulatory ease of doing it. Number two, there's a competitive headwind in doing it, where conventional players in the financing space actually can provide a cheaper cost of funding than maybe the Islamic banks can. Maybe number three is a point that you and I have discussed before, which is there are also a lack of structural incentives. There's nothing driving someone to favor Islamic finance so you have clearly the need for energy transition products and projects, but there's nothing saying it has to be Islamic, right? There's no incentive. Can you tell me, when you've talked about that before, what you mean by that?
Yeah, so again, looking, for example, at Malaysia, right? As an example, you've got tax incentives, right? You've got tax breaks if you're issuing a sukuk, or if you're doing an Islamic financing transaction, because at the policy level, the government realized, you know what, we actually need to tap all sources of finance, right? From everywhere, from everyone who's got money to give us to develop, we've got to tap it, right? But it's not a really a level playing field, because someone started from here and this guy is just trying to catch up. And as you mentioned, the cost of funding would be higher. So how do we address that, right? We address that by providing what the government can control. Let's put tax incentives, right? I think, if I recall correctly, I think it was a 5-year. It's not like a permanent thing, right? Because the idea is just to incentivize it, to allow it to become closer to mainstream use of financing and educate people for a limited period of time. And then maybe it gets renewed for another 5 years until the government is watching. And once you realize, okay, they're both on the same level playing field, then you take those incentives away. That's one example. Another example is looking at Saudi Arabia, for example, and in the stock exchange, you've got something called the Green Index, right? Which basically highlights companies that are using Islamic finance sources to finance their business or their projects or whatever, right? And for an investor, right, that is investing, that prefers to invest in Sharia compliant companies, that basically gives the company an incentive to go out and look for Islamic financing, so that it can have more trading and more interest from people for its share. And as such, it's a very strong business incentive to use Islamic finance. So there are so many ideas about what incentives could or couldn't be given, but at the end of the day, it's in the hands of the policymakers to look at it and realize, is it important for us to actually tap the Islamic finance market? And in order to tap that Islamic finance market, what do we need to do, right? And and incentives are critical, right? As you mentioned, because cost of funding could be slightly higher. We need to make the playing field, like we have to level the competition a little bit to allow access, right? And doesn't have to be permanent. It could be temporary, could be watched, it could be seen as whether it made any difference or not, taken off if it doesn't, if it's making a difference, and we're seeing more investment in Islamic financing structures, then we've done the right thing. If not, then we switch it. But again, it's all up in the policymakers' hands, and how much do they want to tap all sources of funding.
Okay, I'm going to open the floor just for the last couple of minutes for our webinar for questions. But while we're waiting to see if anybody has any questions, I wanted to ask you kind of a wrap-up type of question, Sherief, which was, everything you're saying is a little bit pessimistic. So I'm trying to think, well, why should we be optimistic? I mean, I'm hoping, certainly for Africa, that there's room for optimism to basically have green energy transition. The continent has many countries which are in the midst of transitioning their economy to a more industrial level, or they're very, very agricultural focused. Those are areas where I would think green energy transition could help anyway, just to be able to provide power sources and not use the old style power sources or water treatment or other things that we've done in the past. You don't need to use old technology, better to move to the new. But given all we've said, is it the case that you aren't that optimistic that we'll actually have an element of Islamic finance driving that?
No, I think this is where I move to the optimistic part, right? Islamic finance, as I mentioned, in my earlier conversation, I noted that the lack of access to the banking system might be a disadvantage, but actually the way I see it is actually an advantage if we're looking at it from an Islamic finance perspective. The reason for that is if people don't have any access, they don't have a particular preference at the moment. So if you actually grant them access and explain and provide awareness, right, then you're actually on the same competition and playing level playing field with the conventional, right? Because if everyone doesn't have access, so you might as well get ahead. So where Islamic finance faces competition, it is in markets that are very well established, done in a certain way, very difficult to come in and penetrate that market. But with a population that is young, most of the time on their mobile phones, access now to mobile banking and mobile wallets, all of these things also require a certain level of adaptation from Islamic financing institutions to cater for that massive population that A, is young, B, doesn't have access to banking, and that is on the retail level, right? But on a project financing and green energy structure, it is beyond me how it cannot be seen how compatible Islamic financing is to infrastructure project financing, because Islamic financing in its essence is an asset-based financing structure. So there has to be an asset that is being built or asset that is available, where we're using that as an underlying asset for the Islamic financing structure, right? From a purely principle base, right? Islamic financing, Sharia basically cares about the environment, cares about doing things in the right way, in an equitable way, and focuses on focuses on what it takes to finance in Sharia compliant projects. And that these types of projects that we're seeing in energy transition are naturally Sharia compliant. So you don't even have to think about whether or not you're financing the right thing. You're absolutely financing the right thing, if not the thing that this is maybe even created to finance. So from an asset perspective, it's compatible. From a purely moral and ethics perspective, it's absolutely compatible, right? And in a continent that doesn't have, I mean, there is access obviously to conventional financing, but again, it's not that sophisticated or not that advanced relative to other markets. actually, this is where Islamic financing could come in and tap that, and that becomes the leading Islamic financing market versus anywhere else in the world, because there is competition, but not that established of a competition.
That's an interesting angle, actually. I mean, that's an interesting opportunity, which is effectively it's a clean ground to compete in. So I think we'll end on that note. I wanted to thank you, Sherief, for all your contributions and for having an engaging discussion today. And I wish you and your colleagues, good luck in dealing with the crowds who are all visiting for COP. And I wanted to thank our audience members who dialed in today to listen to us. We're both available for any follow-up questions, and we're happy to discuss outside this webinar any of the potential points that you may want to raise as a follow-up discussion. Sherief and myself are available on the White & Case website, and you can access our contact details there. Thanks very much, everyone. Thanks for dialing in. We hope to see you all again in our next webinar, and have a good rest of your week. Thank you.